Morning everybody and welcome to today's morning market. So today I'm going to discuss the headlines around the US credit rating downgrade. So what are the details on this, and most importantly, what is our take on this? Okay, so let's look at the details. So Fitch, one of the main credit rating agencies, yesterday downgraded the US credit rating from AAA to AA+. So what they cited was an erosion of governance and expected fiscal deterioration over the next 3 years. If we actually dig a little bit deeper into the report focuses very heavily on the recent debt ceiling negotiations and the fact that everything was left running to the wire. So what you saw was the negotiations complete on the 2nd of June, when actually the deadline there was the 5th of June. So if we actually just look at what Fitch said, they said the repeated debt limit political standoffs and last minute resolutions have eroded confidence in fiscal management. So how did the White House react to this? Well, as you can imagine, they immediately came in and defended their position. So the press secretary came out and said, it defies reality to downgrade the United States at a moment when President Biden has delivered the strongest recovery of any major economy in the world. But look, what's our take on this? And I think the first thing to say is, whenever you see headlines that the world's largest economy is going through a credit rating downgrade, that's obviously quite worrying. But I think for me, there's really 3 points that I'd like you to take away. So the first point is that this has happened before. So it's happened in 2011. Exactly the same thing happened with Fitch reducing the US credit rating down from AAA to AA+. If we look at what were the after effects of that, there was no long-term impact on asset prices from Fitch putting together that downgrade. I think what's the second point? The second point is actually anything over AAA illustrates, and this is in Fitch's words, expectations of very low default risk. Default is very unlikely. And then the third point, if we actually look at the other major rating agency, which is Moody's, they've still got the US at the very highest level in respect of credit rating. So what's the conclusion here? Well, the conclusion here is that Fitch is really highlighting the political infighting that happened around the US debt ceiling. However, the US has never defaulted on its debt before, and it's very unlikely to do so moving forward. What else have we got for you today? So obviously the big data point coming out later today is in the UK, and that is UK interest rates, where the expectation is for a 0.25 percentage point increase in interest rates. And we'll come back to you tomorrow to give you all of the news around that. That's everything from me. I hope you enjoyed watching today. Look forward to speaking to you soon. Thank you.